Have you ever felt like you're running on a treadmill? You work hard, you save money, but somehow you're not getting ahead. It feels like the goalposts keep moving and you're always one step behind. What if I told you this isn't just a feeling? What if it's a hidden mechanism, quietly siphoning wealth from your pocket and transferring it to the powerful? This mechanism is called inflation, and today we're going to expose how it really works. Welcome back to Finance House. Today we're diving deep into a topic that affects every single one of us, every single day: inflation. But we're not just talking about rising prices at the grocery store. We're talking about the price of time and how inflation is engineered almost by design to benefit the wealthy and the powerful, while the average person pays the price. Stick around, because understanding this will fundamentally change how you view your money and your future. So what is inflation, really? In simple terms, it's the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Your dollar today buys less than it did yesterday. The standard explanation you'll hear is that it's caused by too much money chasing too few goods. But that's only half the story. The real question is, where does all that too much money come from? Primarily, it comes from central banks, like the Federal Reserve in the US, creating new money out of thin air. They do this to stimulate the economy, fund government spending, or bail out financial institutions. When they print trillions of new dollars, they inject this fresh money into the financial system. But here's the crucial part. Who gets this new money first? It doesn't go to you or me. It goes to the government, large banks, and major corporations. They are the first recipients. And what do they do with this fresh, powerful money? They spend it, invest it, or loan it out. They get to use these new dollars at their full original value before they've had a chance to circulate and cause prices to rise for everyone else. This is known as the Cantillon effect. Imagine you're at a concert and someone starts handing out free bottles of water at the front of the crowd. The people at the front get their water easily and for free. But as word spreads, everyone rushes forward. By the time the people at the back get there, the water is gone, or maybe someone is now selling it for $10 a bottle. The new money works just like that. The first recipients benefit the most. So the powerful, the big banks, the well-connected corporations, and the government itself get to spend this new money before the market adjusts. They buy up real assets, stocks, real estate, businesses. They bid up the prices of these assets, making themselves richer. Meanwhile, this flood of new money slowly trickles down into the broader economy. By the time this money reaches you in the form of a modest pay raise or a stimulus check, prices have already started to climb. Your grocery bill is higher, your gas is more expensive, your rent has gone up, the purchasing power of your money has been diluted. Your salary might have gone up by 3%, but if inflation is 5%, you've actually taken a 2% pay cut in real terms. You're poor, even if your bank statement shows a bigger number. This is the hidden wealth transfer. It's a stealth tax. It's not legislated, and it's not debated in public. It happens quietly, day after day. Savers and wage earners, people who hold their wealth in cash or rely on a fixed income, are the biggest losers. Their hard-earned money evaporates in value over time. Now, let's look at the other side of the coin. Who are the biggest winners? First, as we mentioned, it's those closest to the money printer. But second, it's debtors. And who is the biggest debtor in the world? The government. Inflation allows the government to pay back its massive debts with cheaper, devalued dollars. It's like taking out $1 million loan and paying it back with money that is only worth $500,000. It's an incredible deal for the borrower. The wealthy also understand this game. They don't hoard cash, they do the opposite. They leverage debt to buy assets. They take out loans to buy real estate, stocks, and other investments that tend to rise in value with inflation. Then they pay back those loans with inflated, cheaper dollars, while their assets have appreciated in value. They are playing the inflation game to their advantage, while the average person, who is taught to save money and avoid debt, gets left behind. Think about it. The financial advice we're often given is to save money in a bank account. But with inflation at 3, 4, or even 8% in a savings account paying you maybe 1%, you are guaranteed to lose purchasing power every single year. You are being punished for being a responsible saver. Your savings are being eroded to pay for government spending and to enrich the asset-owning class. So what can you do? This isn't about getting angry, it's about getting smart. The first step is to change your mindset. Stop thinking of cash as a safe long-term investment. It's not. It's an ice cube melting in your hand. You need to convert that melting ice cube into something that can withstand the heat of inflation. This means owning assets, not liabilities that take money out of your pocket, but assets that generate income or appreciate in value. This could be investing in the stock market through low-cost index funds, buying real estate, or even owning a piece of a business. These are the things that the wealthy use to protect and grow their wealth. They are essentially boats that rise with the inflationary tide instead of anchors that sink. The system might seem rigged, but you don't have to be a victim of it. By understanding how inflation really works, you can start making financial decisions that protect you from this hidden tax. You can turn the tables and make inflation work for you, not against you. It's about shifting from being a consumer and a saver to being an owner and an investor. This is the price of time, and it's the most important financial lesson you can learn. The value of your money is constantly changing. The powerful have been using this to their advantage for centuries. Now you know the secret. The question is, what will you do with this knowledge? Thank you for joining me on Finance House today. I hope this sheds some light on a complex but vital topic. If you found this valuable, please give this video a thumbs up and subscribe to the channel for more insights that can help you build real, lasting wealth. Hit that notification bell so you don't miss our next video. And let me know your thoughts in the comments below. How has inflation affected you? Thanks for watching, and I'll see you in the next one.